Hello traders, welcome back. My name is Neville Hornsey, market analyst for YouTrading, and today I'll be looking at the moving averages. For those of you that follow me on YouTrading.com, you'll see that on my analysis, I generally have three moving averages. If you look to the left-hand side here of the chart, they say EMA, so I generally choose the exponential moving average rather than the simple moving average. But lots of traders will use simple moving averages, so you just need to find what you like. I generally use the same period moving averages. So I use 20, 50, and 200, and I label them red, green, and blue in that order. This gives me the sort of just a quick sort of, first initial impression of a chart. I can see that, in this chart, price action is clearly going from bottom left-hand corner to top right-hand corner. So obviously we're in a bull trend. But with the moving averages, if they're sort of diverging away from each other rather than converging together, I can say that, not only are we in an uptrend, but that sort of momentum should accelerate price action higher. So I'm expecting to see higher prices in the near future. So that's what I put on my chart. Lots of traders will put similar moving averages on, and 200 period moving average is definitely one of the sort of standards. Obviously, just looking at this chart, you can see that traders were keeping a watchful eye on the 50 period moving average because, sort of between May and September of this year, is often used as a place to buy the dip. 20 period moving average, generally, the sort of faster momentums, that's when that was being used as a dynamic support. And it's a visual clue when, things are changing because, if you see the 20 acting as support and then suddenly prices close underneath it, then here you see that price action actually dipped down in between the 50 and the 200. And again, it did it there. Here you can see price action starting to hold above the closes are above the 20. So this part of the sort of momentum was intact. And then we had a bit of a sticky period here. And so, obviously, I'm not the only person looking at these period moving averages. Maybe the same could be said for the simple moving average. If you were to put a 200 period moving average, it's relatively similar to the EMA. So maybe lots of traders look at the simple moving average as much as they do the EMA. It's it's up to you to find which sort of makes sense to you. And then basically, if you choose something and you put it on your chart, you want to keep it there if it's useful. If it's not useful, you want to get rid of it as quickly as possible. All right, so how do the moving averages, to me, describe momentum? Well, obviously, you can have a moving average which is diverging away from the other period. So here we've got the 20 diverging away from the 50. The red, the green, and the blue are stacked in that order. So that's, to me, is a bullish momentum. When price gets below the 20, that's my first clue that momentum could be changing and that the trend could obviously change. Here you see the 20 and the 50 start to converge together. Price action becomes a bit more choppy, not trending anymore, obviously. Not as strong as momentum as it was here. People aren't buying the dip anymore. They're trying to work out where value is. Value at this point in time, traders were starting to look towards a 200 period moving average. I know I certainly thought that, we could possibly come back down and test that. Then obviously you see here, tested dynamic support and resistance. So here it becomes resistance. The 20 and the 50 period moving averages, stop price from accelerating any higher, comes back down. Then we get some sort of catalyst. Prices clearly cross over the 20 and the 50, close above it on a big bullish bar, and then, back to uptrend. So currently, if I was just to quickly turn on this chart on this period, this time period, so the daily chart, I could say that price action is moving from bottom left to top right. That's bullish. Momentum is to the upside. So momentum is probably going to sort of keep supporting and driving prices higher. If this is the all-time high, I think we're going to get new all-time highs in the very near future. If I go to the New Zealand dollar versus US dollar chart, things are obviously a lot different. This is a daily time frame again. The moving averages 20, 50, and 200, red, green, blue. Clearly, price has gone from left to right, so not trending either bullish or bearish. We're in a sideways market. And here you can see that price action is sort of coiling around the moving averages. And at the moment, If you look to a bar, so on the left-hand side of a bar is the open, right-hand side is the close, and currently price action here is at 0.73. Found some dynamic resistance at the 200 period moving average. And if you were to like count back 200 bars, so from here all the way back to sort of March, April time, currently this closing price here is above that closing price back then. So price action is actually finding, some sort of bullish momentum, but it hasn't got above the 200. If we look to the 50, go back 50 periods, price action closed down here. So whilst, this price is above that closing price, again, you could sort of say maybe there's a bullish case to be made, but because it's below the 50, you need to be cautious. And then if you look to the 20 period moving average, that's obviously clearly above. And if you go back 20 periods, then price action was all the way up here near 0.719. So obviously we're not currently in a very bullish sort of environment. We are making swing low, swing high, higher low, higher high. So price action since August is making, an attempt to get out of this range. If we were to get above this price action up here, that's when you sort of see an acceleration higher. Price action, maybe on a fundamental reason, moves higher. I'm thinking the RBNZ on the 24th of this month, if they raise rates, that's going to be bullish to Kiwi. So if we get prices trading above here, depending on how long it takes to get above there, we could be into this period here. So 200 bars, because it becomes sort of mixed in with this, but 50 and the 20, sort of the more sort of short-term price action is very bullish. And that's when we can start to think, prices above all the moving averages, generally above the recent price action. And that's when we get more and more investors and traders jump in and start to try and tackle these swing highs here, looking for liquidity. So that's what I look for in terms of momentum. It's obviously a lot easier when you've got a big uptrend, but it does become useful for describing momentum within a range and whether or not momentum's building and whether you can expect to see a breakout to the upside or downside. So who came up with the moving averages? Well, obviously average price of, however many periods, and it's been around for over 100 years now. So if you just do, a quick search of who first came up with the moving averages, you can sort of see the history of it. Why do traders use particular period moving averages? Well, if you were to go and ask the internet how many trading days there are in 2021, they would say that it's 252 trading days. And if you scroll through, recent history, you'll see that, the average is around 252 days every year. Sometimes it's 253, sometimes it's 251. So that's the actual like Monday to Friday, Forex open, no bank holiday type stuff. So some traders may actually be using, rather than the 200 period moving average, they might be use a simple moving average, and they might actually plug in 252 or 255. They'll find what works for them. 252 days of price action. You want to see a good year's worth of price on your chart, so you can see how the moving average relates to the rest of the year. So here we are in November 2021, and if we go back to here, November 2019, that's 2 years worth of price action is sort of encapsulated in the actual price action. So bottom left hand corner to top right hand corner, uptrend. Obviously we had this period here where we had the pandemic, prices crashed through all of the moving averages, showing that fundamentals, macroeconomics sort of trumps any sort of indicator. However, people started to buy here when the Fed decided to sort of step in. So some people, the fundamental traders who saw all this happening, maybe they used technical analysis to get out of the trend. So when price got below the 20 and the 50, obviously this trend had changed. Maybe they targeted down here looking for a buy here, but obviously fundamentals got even worse. And so they would have stepped aside probably if they were fundamental traders, waited for something to change, Fed step in. That's when they buy, or these sellers stop selling. And then, the rest of the momentum sort of traders, the sort of CTAs, they wait for the 20 or the 50 to get back above the 200 period moving average. So whether that's the EMAs or the SMAs, and you see here we had a sort of an acceleration higher, a big pullback into 200 period moving averages, and that's when the trend following sort of traders have really sort of held on now and don't look to be stopping. So that's why the 200, the 50, and the 20 are relevant. If you were to like divide 250 days into the actual weeks, that's 50 weeks. So it makes sense to have the 50-week period moving average on the weekly chart. So here you go, 50 periods here. Price is above 50-week average, so that's all good. So yeah, a lot of people use Fibonacci sort of ratios. You can use whatever moving average you want, but for me, I like to use what everybody else is using. And if I think that 200 period moving average, 20 and 50 are industry standard, then I just want to see what everybody else is seeing and reference the prices that they're referencing. Right. I hope that makes sense. You basically look for a quick visual guide to whether or not we should be expecting higher prices or some sort of change in trend. And, if you keep to the standards or whatever works for you, if you keep it on your chart for a period of time, then you get to sort of see how price reacts to these moving averages, and you can sort of make more informed decisions on whether or not you feel the trend is changing or whether accelerating. All right, I hope that makes sense, and I'll speak to you tomorrow.